Hello and a warm welcome to all the esteemed viewers of the YouTube Forexer channel. I hope you're doing splendidly, and I have some incredibly exciting news to share with you today. In this captivating video, I am thrilled to introduce you to the latest and most cutting-edge trading strategy known as smart money. Brace yourself for a mind-blowing experience as we delve into the depths of this strategy, which can revolutionize your trading journey in Forex, cryptocurrency, and stock markets. So, I kindly request you to carve out some precious time from your schedule and immerse yourself in this video. Trust me, by the time you finish watching, you will emerge as a seasoned and professional trader, armed with invaluable knowledge and skill. Get ready for an extraordinary educational journey that will exceed your expectations. Let's dive right in. Now, before I unveil the trading strategy, there are a few key concepts in the smart money trading plan that require practice on the chart to fully grasp. So, let's take a closer look. Firstly, we have market structure and direction. This involves determining the crucial levels of the chart structure and identifying whether the market is bullish, bearish, or directionless. Next, we have optimal trading zones and order blocks. These specific areas on the chart can potentially provide us with high probability trade opportunities. Moving on, we come to liquidity concepts. Liquidity is the lifeblood of all markets, and it's crucial to identify areas where positions could be liquidated to prevent unexpected losses. Lastly, we have entry setup and managing an open trade. Once certain favorable conditions align, and we find an entry point, we execute the trade with specific order details. Additionally, managing an open trade requires continuously monitoring market conditions and making necessary adjustments for potential success. This trading plan consists of two major time frames. Firstly, we focus on the higher time frame for most of our general analysis. During this phase, we analyze the market structure, identify key levels, determine fair value, locate gaps, pinpoint liquidity areas, and most importantly, identify optimal trading zones that could potentially offer high-quality trading setups. In the second part, we zoom into a lower time frame to find confirmation and enter positions. It's important to note that this trading plan is not limited to any specific chart or time frame. However, the entry time frame should be 2 time frames lower than the general higher time frame. In this video, we will be using a combination of 2 time frames for analysis. For example, if we analyze the market structure and identify optimal trading zones on the 4-hour chart, we will look for confirmations and entries on the 15-minute chart. Similarly, if our higher time frame is the 1-hour chart, we will zoom into the 5-minute chart to open positions. Now, let's simplify this trading plan into 5 simple steps. After going through these steps, we will explore entry models to visually explain how the strategy can be implemented. If you find it challenging to fully understand each of these steps, please be patient because we will delve into them in depth with multiple real chart examples. So, let's begin with the first step, analyzing the market structure. In this general analysis, we apply the market structure concepts of smart money to the chart, aiming to simply determine the market direction and key levels. In an uptrend, the price consistently forms higher highs and higher lows, breaking the market structure to the upside. As traders, we prefer to trade with the dominant uptrend because it increases the likelihood of success. However, this process continues until we observe a change of character, which indicates a potential reversal. A change of character occurs when there is a break and close below the lowest point of the swing low between 2 consecutive highs. This change in price action suggests a shift in market sentiment and could potentially lead to a reversal in the trend. It's important to closely monitor the market structure and be vigilant for any signs of a change of character, as it can significantly impact our trading decisions. Now, let's move on to the next step in our trading plan. In a downtrend, the price consistently forms lower lows and lower highs, breaking the market structure to the downside. We prefer to trade with the dominant downtrend until we observe a change of character. A change of character occurs when there is a break and close above the highest point of the swing high between 2 consecutive lows. This change indicates a potential shift in market sentiment from bearish to bullish. It is important to closely monitor the market structure and be alert for signs of a change of character. Recognizing these shifts can help us adjust our trading strategies and take advantage of emerging bullish opportunities. Now, let's move on to the next step in our trading plan. In addition to uptrends and downtrends, we also encounter directionless markets. A directionless market occurs when there is insufficient supply and demand to establish a clear directional trend. In such cases, we observe continuous changes of character on both sides, making it difficult to identify a definitive trend. It's important to note that this trading plan is primarily designed as a trend continuation strategy. Therefore, it is best to implement this strategy when you can clearly identify the price direction in the market. During directionless markets, where no clear trend is present, it may be more challenging to effectively apply this particular trading plan. Understanding market conditions and being able to identify whether the market is trending or directionless is crucial in determining when to apply specific trading strategies. Now, let's move on to the next step in our trading plan. Here, we are looking at the euro to US dollar pair on the 4-hour chart. Let's implement the first step of our trading plan, which is to find the direction and key levels. Upon analysis, we can observe a clear moving uptrend characterized by a series of higher highs and higher lows. The market has broken to the upside, indicating a bullish sentiment. Therefore, we will focus on identifying buying opportunities. To determine the key levels, we can consider 2 recent consecutive highs. The lowest point of the correction between these highs serves as our swing low. As long as the price remains above this key level, we identify the market as bullish. Additionally, we can mark the latest high created by the price, which will serve as our target level on the higher time frame. Now, let's continue observing the market to see what unfolds next. In the subsequent price action, we can see that the market broke the previous structure and formed a new high. However, the price struggled to gain significant upward momentum, as indicated by multiple rejections. This loss of momentum becomes evident. Furthermore, there is a break and close below the latest swing low, which signifies a valid change of character. As a result, we are no longer in an uptrend. Our focus now shifts to waiting for a series of downward moves, known as a 1, 2, 3 pattern, to confirm the bearish direction. During this phase, we mark the most recent key levels and look for short trade opportunities. This completes the first step of our trading plan, which involves identifying the market direction and key levels. Now, let's proceed to the next step and explore confirmation and entry models. In the second step of our trading plan, we focus on key concepts related to smart money. This step helps us identify fair value gaps, liquidity areas, and optimal trading zones on the higher time frame chart. The fair value gap is a 3-candlestick pattern characterized by a significant gap between the shadows of the first and last candles, with no overlap. These gaps occur due to an imbalance between buyers and sellers, resulting in sharp price moves. The market tends to return to these gaps to fill the remaining orders and restore balance. Liquidity areas are regions on the chart where there is a high concentration of buy or sell orders. These areas often function as support or resistance levels and present favorable trading opportunities. When there is sufficient liquidity, the market tends to continue in the dominant direction. For example, if the market has been trending upwards, it is more likely to continue in that direction if there is enough buying pressure. Understanding these key concepts allows us to identify fair value gaps, liquidity areas, and optimal trading zones on the higher time frame chart. This knowledge enhances our decision-making process and increases the probability of successful trades. Now, let's move on to the next step in our trading plan. Liquidity plays a crucial role in the market as it acts as the fuel that drives price movements. Liquidity areas are specific regions on the chart where retail traders often enter the market and place their stop-loss orders. To simplify our analysis, let's focus on equal highs and lows and the latest swing points. These areas are important because they often attract the attention of market participants and can serve as key support or resistance levels. When the market grabs the liquidity areas, it means that price action reaches these regions and triggers orders from retail traders. This influx of orders can lead to significant price movements. By recognizing and monitoring these liquidity areas, we can improve our chances of success. They provide valuable insights into where market participants are likely to have placed their stop-loss orders, which can act as potential targets or areas of interest for our trades. Remember to incorporate this understanding of liquidity areas into your trading plan to enhance your decision-making process and increase the probability of profitable trades. Optimal trading zones refer to areas where high-quality trading concepts, valid order blocks, and order flow areas intersect. These zones, which adhere to specific rules, present excellent levels to consider for trading opportunities. Now, let's apply the second step to real chart examples. On the gold 4-hour chart, we can observe a downward trend. There are significant fair value gaps that have recently formed. If the price retraces to fill these gaps before resuming its general direction, it can present an excellent trading opportunity. Now, let's identify the liquidity area. We know that the previous swing low on the chart served as a level of support. If the price returns to this level, it is likely to act as resistance, and we can expect some form of rejection. Traditional price action traders would view this as a short opportunity and sell the market. They would place their stop orders above this zone, which would accumulate a significant amount of liquidity. This provides an opportunity for large market participants to trigger these stops and benefit from the liquidity surge, causing the price to fall further. To determine our optimal trading area, we can look for the candle that created the bearish inefficiency or the most recent bullish pressure before the sharp downward move. This candle can serve as a great entry point for short trading opportunities. However, it's important to note that even with a good entry zone, the market can sometimes disregard it and continue with its dominant momentum. To increase our confidence in the trade, we need double confirmation and should observe reversal signals on lower time frames. This helps ensure that the market is indeed showing signs of a potential reversal before entering the trade. On the GBP/USD 1-hour time frame, we can observe a moving downtrend. Let's proceed with the second step and identify the fair value gaps, liquidity areas, and optimal trading zones. There is a significant fair value gap present, so we mark it on the chart. The market has repeatedly encountered strong resistance and been rejected at this level, indicating the accumulation of liquidity above these equal highs. The order block formed at this resistance level provides an excellent area to search for short opportunities, as it offers strong confluence with multiple concepts. These are the concepts we apply to the chart in the second step. In the next step, we patiently wait for the price to retrace and fill the fair value gaps. Once that occurs, we zoom into lower time frames to search for confirmation signals. These signals will help us determine the optimal entry points for short positions. Now let's continue with the third step, the confirmations and entry. In this step we will apply the market structure concepts, wait for entry signals and open the position aligned with the higher time frame analysis. After mitigating the fair value gaps in the area, we will look for reversal signals to confirm the entry. We must wait for a change of character to verify that the short-term trend is over and the market can continue in the direction of the dominant higher time frame. If there is no change of character, we will not have a trade. Once we receive confirmation of the change of character, we have two entry trading models. In the bullish scenario, if the change of character move creates a valid order block with fair value gaps, we will place a buy limit order above the order block by a spread size. The stop loss will be set below the swing low. To manage the trade, we will aim to break even by closing half of our position when the price reaches our 1-to-2 target ratio. This means that if our initial risk is 1 unit, we will look to take profits equal to 2 units. Furthermore, we will consider closing our remaining profits if the price reaches a higher time frame supply area. This area represents a significant resistance zone where selling pressure may increase. By implementing these trade management strategies, we aim to protect our capital, secure a risk-free position, and capitalize on potential profits in the bullish scenario. And the second trading setup, if there is no fair value gap in the order block, we can apply a different approach. We will utilize the Fibonacci retracement tool, drawing it from the start to the end of the change of character move. To enter the trade, we will place a buy limit order precisely at the midpoint between the 0.618 and 0.786 Fibonacci levels. This area is considered a potential support zone. The stop loss will be set below the swing low to protect against potential downside movements. Regarding taking profits, we can apply the same concepts as before. For example, we can aim to close half of our position when the price reaches a predetermined 1-to-2 target ratio, and then manage the remaining profits based on higher time frame supply areas or other relevant resistance levels. We utilize 2 time frames, a higher time frame for general analysis and market condition assessment, and a lower time frame for confirmation and trade entry. It's important to note that this trading plan can be applied to any time frame, but the entry time frame should be at least 2 times lower. In the first step, we analyze the market structure to determine the market direction and key levels. We identify breaks in structures and changes in character to identify the market direction and mark key levels where price can react. For example, we observe a moving uptrend with multiple consecutive breaks to the upside. Since the direction is bullish, we focus on long opportunities. The latest high becomes a suitable place to set our long-term target. Additionally, the recent higher low serves as a key level. If there is a break and close below this level, we no longer consider the market an uptrend. In the second step, we apply the key concepts of smart money on the chart to identify fair value gaps, liquidity areas, and optimal trading opportunities. For instance, if there is a deep correction that mitigates the fair value gap area and captures liquidity below equal lows, it presents a perfect trading opportunity to go long. As for the timing of entry, we consider buying during short-term downtrends in the lower time frames. And the next step, we will zoom into the lower time frame to identify reversal signals and determine trade entry points. Reversal signal confirmation and trade entry. Wait for a change of character to confirm the end of the short-term downtrend and the potential continuation of an upward move. Utilize 2 entry setups for opening positions. If the change of character creates fair value gaps, place a buy limit order slightly above the order block. If no gaps are present, use Fibonacci retracement levels and enter positions in the middle of the 61.8% and 78.6% levels. Set stop loss orders below the swing low to manage risk effectively. Implement various trade management strategies as needed. by observing reversal signals and confirming the end of the short-term downtrend. We can enter trades using either fair value gaps or Fibonacci retracement levels as entry setups. Setting stop-loss orders below the swing low helps protect against adverse price movements. Now, let's analyze an example. The price is in an uptrend. I have previously identified swing lows and swing highs in the 1-hour time frame. I have also determined fair value gaps and demand zones. I will now switch to the 5-minute time frame and enter a long position after a change in structure according to the rules. Hanko Trade is a broker that offers a captivating trading experience. With a user-friendly interface and advanced features, Hanko Trade provides traders with the tools they need to succeed. Whether you are a beginner or an experienced trader, Hanko Trade offers a wide range of trading instruments and platforms to cater to your needs. Their dedicated customer support team is available to assist you at any time. Start your trading journey with Hanko Trade and unlock the potential for financial success. In this case, we are waiting for the price to reach the demand zone. If the price reaches the demand zones, I will patiently wait until the conditions align. The price crossed the first demand zone, we are waiting for it to reach the second demand zone. Here the change of character happened. I optimize the demand area and open a buy position. Thank you all for joining me on this incredible journey. I want to extend my heartfelt appreciation to each and every one of you for your unwavering support. Your continued support means the world to me and keeps me motivated to bring you the best content. I kindly request that you not only subscribe to the channel and like the video but also spread the word by sharing it across your social media platforms. Together, let's empower others with this invaluable and precise strategy. Stay tuned for more exciting tutorials in the future. Wishing you all tremendous success and fulfillment on your journey ahead.